Welcome to the market update of Belvoir Capital, January 2023. Wow, a month has passed like nothing. And what has happened? A lot of things have changed, especially on the equity side. We've seen China coming from a zero COVID policy, pivoting to a 180-degree shift to a 100% COVID policy. This reopening trade gives a lot of opportunities for the market outlook for 2023 and the global economy. And therefore, we've seen also, especially the last days of January, the Nasdaq rallying about 10% from the lows and coming up to the best index in the month, followed by the more defensive ones like the Nasdaq, followed by the S&P only 5%, and the Europe with the Euro Stocks and DAX and CAC around 8%. So what has happened in that month is that economy is more robust than we expected at end of December 2022, and the several sectors have been much more resilient against an economic downturn in 2023. So that's what we've seen, and this week will be especially very interesting for the economic outlook coming from the central banks with their new policies, how long and how much they're going to raise rates further, and what happens to the balance sheet and the adjustments on the cost cutting. And that's what we've seen. We've never seen that before, especially on the tech side, with cost cuts on Amazon, Meta, Google, and so on and so forth, for letting people go, like thousands of people go. And the unemployment rate, but in the US, didn't really increase yet. So it's very unclear what's going on. And therefore, it's very interesting to look into the tech analysis of the charts. And there we see that the S&P just crossed the 200 moving average line from the low to the high side. And we're expecting maybe a breakout through the bear cycle. This will show us the next couple of days. So we have to stay tuned and see what's going on. The more defensive sectors and the defensive indices like the Dow or the CAC in France or the DAX in Germany already went through that 200 moving average line and left the path of a bear market cycle. So we are much more positive than we expected in December, especially on the global economy and the 100% 80-degree shift. And we could see that also on the currency side, because the US dollar appreciated last year heavily against the euro and reversed now since mid-November, end of November, roughly 10% from the lows, from 95, 97 to now 108. And what's going on there? Because the interest rate differential is much smaller than 6 months ago. So we've seen that the ECB is also raising rates further, and therefore the euro appreciated. We expect now it's going to be in the range, and we don't see further depreciation of the US dollar and see more range trade for the euro US dollar. And the next days, watch and stay tuned, because that's very important. What happens? Do we break out for the bear cycle and come into a bull market, or do we see new lows as we've seen them in 2023? We stay invested, and you should stay tuned for the next update in February. All the best.